Hi, I'm Caleb, and we're talking about creative finance today, subject to seller finance, due on sale, and how to do these deals safe, legal, and ethical.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 524. Creative financing can open incredible doors for investors, but it can also expose you to serious risk if you don't know what you're doing. My guest today, Caleb Christopher, has made it his mission to make creative financing both safe and ethical. He brings a systems-driven approach that helps investors avoid costly mistakes while still using creative strategies to build long-term wealth. Caleb, welcome to the show.
Thank you, sir.
Tell our listeners a little bit about yourself and just kind of like the type of creative financing that we're talking about here.
I feel like the everyman investor who read Rich Dad, Poor Dad and was like, oh man, I've been missing out for too long. So I read that about, 6-7 years ago, and I started pursuing learning and saving money to buy a house. So I've got a couple of rentals at this point, and at one point, I discovered creative finance, and I love creative problem solving. So that's where I spent my time diving deep.
So creative financing is problem solving. I mean, anytime you run into a stumbling block, it's usually all about solving problems for the seller, the buyer, whoever. Talk about some of the examples of the types of creative financing that you have done.
I just want to highlight that you are absolutely right that it is problem solving, because when I see creative finance done wrong, it's when somebody's usually a wholesaler or direct to seller buyer who's like, please do me a favor, Mr. or Mrs. Seller, sell it to me on seller finance or sub to or whatever method. Those are the ones that break down pretty easily, right? When the seller's doing you a favor. So it needs to be, yes, you need to be seeking it, I suppose, but it needs to be bringing a solution to a seller. There's almost always a better option unless creative is the only thing left.
I want to dig into what is creative financing or what is the creative financing you're doing and get some examples of how you've used it.
Creative finance I would define as non-bank financing, doing real estate deals without bank financing involved. And I would consider hard money lenders probably are going to be in the range of bank financing for this purpose. So you can use PMLs, but generally we're getting seller finance of some format or taking over somebody's loan payments, an informal assumption, which is called sub 2.
And are you talking about single family or are you doing multifamily this way? How are you leveraging creative financing?
The more expensive the asset, the more open sellers typically are to creative methods, because sometimes it's harder to offload a very expensive asset. So they're willing to get more creative. But my world is the single family home, helping wholesalers and real estate investors get these deals structured, papered correctly, and closed.
Take us through some of those scenarios.
I got a call from somebody, a wholesaler, and he said, hey, can you help these people? What's the story? Well, they bought another house. Their realtor promised them that they'd sell off house number 1. They already bought house number 2. They're making 2 house payments. The realtor they went 180 days, still didn't sell. The payments, double payments, are killing these people. And the wife works in financial services, and she's going to lose the house or lose her job if she starts having payment issues. I said, okay, let's have a call with him. And he can't find anybody else to buy the house. I talked to the people, verified the story. That's really what it is. And they owe $213,000 on the property. That's what it's worth. Hence, it won't sell for any more than that. And the realtor fees would have cut into their pocket pretty hard too upon that sale. And so I talked to them, and I found out, I underwrote the deal, and it just doesn't cash flow as a rental, which is why other investors weren't buying the deal. And I said, listen, you guys are talking to me because other stuff hasn't worked. You got referred to me because my goal is to help people, and I love using unconventional techniques to do so. And I said, I'll show you my spreadsheet, and this is why people are not buying the house. It's negative cash flow. It will not rent for more than a couple $100 over what's owed every month. So it's just not a deal, but you already know that. So I hate to tell you this, but this is the offer that I can do to help you out. If you made up the difference to me every month you can get rid of the house payment, but you'd have to make a payment to me to make up for the shortfall in rent. And that's only for 2 years. I can raise rents over that time, but I'm not really, I'm not dying to have this deal, but I want to help you guys out. And I don't want to see it go to foreclosure. You've got a young family that you're starting. I would love to buy a house. Like 5 years from now, Caleb is going to kick today Caleb in the head if he doesn't find a way to like do this deal and buy another house. But it's got to make sense. And right now I've got other projects going on. So if you paid me $200 a month for the next 2 years, I would take over the payments. Here's my credibility. Here's my credit score shows that when Caleb says he's going to pay, he's going to pay. And I'm telling you, I will pay your mortgage, whether it's rented or not. But I turn it into a rental property. I leave the debt in place. I pay your mortgage payment. That's how it works. And they were like, whoa, we got to think about that. I'm like, that's fine. I'm not asking you to give it to me. I'm making this offer to help you out. They called me back 2 days later and said, we'll do that deal.
That is the first subject to story I've ever heard where you talk the sellers into making monthly payments to you.
They ended up calling me after a tax return. They called me and said, can we just pay the rest of it now? Like, because I had them sign a promissory note to me at closing. I said, yeah, sure. There's no problem with that. There was no interest on it. It was just to help me make up for the shortfall in rent versus expenses. And so they paid me off early. Oh, one other bonus. There was an insurance claim already approved on the house, and there was a check waiting for $6,054. They assigned that check over to me. I fixed the flooring. So that paid all my acquisition costs, and then they paid me $200 a month. It has sat vacant for a few months at a time. So, it's not a super stellar deal, but I did pick up a 3.625% interest rate with 28 years left on it.
This is a long-term play, obviously. I mean, over time, you're not making any money right now, but over time, the value will go up.
Yeah, over the last 2 years, I'm net negative over the last 2 years, but I didn't have to save up a down payment for this thing, you guys. I have an asset that's worth $200 to $250, depends on what day you look at it, but $200 to $250, and it rents for just over break even. Like it pays all of its own expenses, and it will pay down over time. And it's worth something in the long run.
What was the obligations of the sellers then? I mean, they were paying you $200 a month over a 2-year period just to dispose of any more financial commitment to the property.
So legally in a sub 2, we're not changing who's committed to pay the mortgage.
Because they're still on the hook for the mortgage, yeah.
That's right. So if I miss payments, and you want to talk about risk, that's risk. And that's why creative finance should be a last option, not a first option. Don't ask people to do you favors. This is a solution to a problem. And the risk of Caleb not paying their mortgage and them getting credit damage was lower to them than them not being able to pay it or having to pay out of pocket. So it was worth the trade-off to them. But I made sure they darn right well knew your credit is still on the line. I'm just making your payment for you directly to the bank.
If they had sold it, they would have basically sold it at a loss and had to bring money to the table.
Yeah, even if they sold for exactly what they owed, the cost of agent fees would have brought it down, and they would have had to come out of pocket $5,000 or $10,000. Well, more than that, more than $5,000.
So they were going to lose money anyway, and you just basically gave them the opportunity to spread that out over a 2-year period, probably a smaller amount over a 2-year, and less of it. Take over the mortgage payments, so they didn't have to worry about that anymore, and then move on. Now, in the past, when I've had the conversations about subject to, where you buy a property subject to the existing mortgage, where you take over the mortgage payments, interest rates were low, so it never really triggered anything with the bank. But you just mentioned this one had a 3 something interest rate. What is preventing the bank from calling that in based on whatever it says in the loan contract?
Nothing's preventing them from doing that. So the thing is with sub 2s, and by the way, I own a company that only helps people do these. So we do dozens per month, and that company's 3.5 years old, has over 200 5-star reviews. This is what I do. And we've dealt with due on sale, and due on sale is a big scary thing for some people. It is a risk of sub 2. You can't turn that off. You can't get away from it. It lives as long as the loan is attached to that property. And if that's too scary, don't do the deal. Somebody else is probably willing to do that. Somebody else is cashed up who can handle the issue, maybe a refinance. But we've also fixed due on sale multiple times. Here's the thing. When the borrower gets a loan, they promise to the bank, you can accelerate my loan if I breach this mortgage contract. That includes transferring it without the bank's permission. So there is a technical default or a breach of that mortgage when they transfer the property to my company. If the bank notices, number one, and if the bank cares, number two, they can, not must, they can accelerate that loan. That's always hanging over my head.
You have a company that does this, so you're an expert in this area. How many times have you had that subject to called in by the bank?
Personally, I've got a very small portfolio. I have personally not had it called yet. However, my company has fixed over 24 at this point.
And when you say fixed, what does that mean? How do you fix that?
So to me, fixing is restructuring the deal in a way that is satisfactory to the lender, stopping the acceleration. So the acceleration stops and the property owner, whoever owns it, not necessarily the borrower, whoever owns it, is not forced to sell, refinance, or the house doesn't get foreclosed on. Those three things I would consider a failure on my part to resolve the due on sale. Otherwise, it gets very complicated with all the parties that are involved. Sometimes the borrowers got it to a wholesaler who then assigned it to somebody else who then sold it on a wraparound mortgage to an owner occupant. Like, I don't want to confuse everybody, but they can get very complex. And so when I step in to get involved, I need to know who's involved, who was involved, what promises were made, what are your short-term plans, what are your long-term plans, what state is it in, how was it structured. Let me look at all these things, and I want to restructure the deal so that everybody gets what was promised, but it may require us to restructure the transaction, reclosing it into a different property. It can get pretty complex.
Give us an example. Like, well, how have you resolved some of these issues?
My favorite is when we get to the legal team at the bank and say, hey, this was going to foreclosure earlier. The person who owns it now reinstated the mortgage. They got you caught up on payments, right? Yeah. And they've been paying for the last 18 months on time, every time? Yeah. So can we just not do this? And pause for effect. And the bank said, let me take it up the line, up to the top of the legal chain. And they came back and said, yeah, actually, we're not relinquishing our right to do it in the future. If you default, if you're late on one payment, we will accelerate the loan. But fair point. We're going to leave it alone for now. That was my favorite resolution. And sometimes just talking with them resolves the issue. Other times you've got to do the technical compliance. Technically, the deed was transferred, and if you transfer it back to the previous owner or the borrower, then that stops the problem. And then we restructure and do new paperwork to reclose the transaction, either into a contract for deed, a land contract, or a lease with an option to purchase, or whatever's going to satisfy the bank and not trip it up again.
The bank wants their money, but you also have to understand that they want to have performing loans too. And that, if they go into non-performance or foreclosure, that's not something they want to have on their books.
And I think there's a common misconception that lenders are not trying to recover funds. They don't call due on sale so they can pull back in 2% interest loans so that they can reissue at 7 or 8%. That's not how that works. They lent the money, they sold it off to a note holder, like a portfolio that holds that. Other than small local or regional banks that actually hold and service their own debt, that's the exception of who might actually want the loan back so that they can reissue the funds.
Once most banks or lenders make that loan, they sell that loan off. So it's no longer their concern.
They're in the business of making loans, and then they sell it off as a packaged product with a qualified borrower. And then some big company or retirement fund or somebody along those lines buys up hundreds or thousands of mortgages at a time for billions of dollars into this giant portfolio package that has an average performance or payment or non-default rate of X%, and they buy it based on the risk level of the package of loans. But yeah, you're averaged into something huge.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com.
If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com.
What are some other creative techniques that you use, Caleb?
I think there's just a lot of tips and tricks on a state-by-state basis and situation, structuring the deal in a way that satisfies all the parties. So I'm not going to stop saying this. Creative finance solves problems. And so understanding the story behind the deal is critical to being able to structure a deal correctly. I also think in creative finance, there's a lot of room to do things unethically. A lot of room. And that displeases me greatly. When I did my first couple of deals in creative finance, we got to the title company, and this is when I was, wet behind the ears. I was trained on how to get deals under contract and taught some things that turned out to be lies, by the way, from the gurus. And then I'm working for a wholesale team, getting these things under contract, and then I see what's happening with them after, and I'm like, no. We got that under contract under these promises, and that dude is not going to honor those promises. Like, what do you do there? It was a terrible situation where I was powerless at that point to do anything. And the title company's not there to help. They're just there to close it. And there's really no authority there to help de-risk the transaction, guide it legally and ethically. And so I set out to become the person that wasn't there for me. And that's why I created my first company.
What were some of the things that you learned from the gurus that you found out to be unethical later on?
Making promises about how payments work, about how you can get the property back if I miss a payment or two payments or anything like that. A lot of things were conceptually true. However, when you test it out in the legal system, it's like, no, that falls apart under scrutiny. Absolutely. Yeah, because you could write anything you want on a contract, but it may not necessarily be enforceable.
So were the contracts intentionally counter what was being said, or was it just a kind of a legal oversight that when held to scrutiny turned out?
A lack of legal oversight to be able to honor promises made. Now, if everybody keeps their word, there's no problem. But my concern was there's enough room for somebody to really be a dirtbag here and hold the seller or the original borrower to the hot rocks because they don't have to honor their promise legally.
Any other unethical things that you've seen that you'd like to warn our listeners about?
A lot of times the wholesaler is taught to make promises as if they're the actual buyer, and I think that's unethical. Explain what the transaction is, what it's going to be used for, what the property is going to be used for. Don't say you're going to fix and flip it if you're not going to. Don't say you're the buyer if you're not. Say, my job, my business, I just want to make sure we understand this. My business is finding these deals and negotiating them for reputable buyers. And don't say reputable if your buyers are not reputable.
You're saying reputable, like a good reputation.
Yeah, somebody who can honor their promises. And so there are wholesalers who have relationships with solid buyers, men and women of high character, of great success and past honoring of commitments, good credit score, whatever qualifications all factor into that. But if you're just putting it under contract to assign it to anybody who will pay you a $3,000 assignment fee, you should not be doing that.
So wholesalers need to be upfront as to what the nature of their relationship is, and they're finding the end buyer. They are not the end buyer.
I'm very comfortable saying no to a deal personally. Like when I was doing wholesaling, I would rather opt myself out of a deal because I can't make and honor a certain promise or something along those lines, or I would let the deal slip away because they were uncomfortable with the business practice. But in that case, the seller, I would warn the seller, if you get calls from other people, they work just like me. So if my paradigm doesn't work for you, you make sure that the other person who is offering to buy your property is actually the buyer. Ask for evidence or proof that they're actually buying, because they are taught to lie or to misrepresent. And I'm here for you. If you want to come back, I'm here, and I want to stay in the middle and make sure that this deal goes through the right way. You can send me other contracts and I will help you poke through the BS.
What's the toughest problem that you've had to solve?
I get some really weird stuff because people know that I'm like a deep expert in creative finance. And we had a guy call me at 10 p.m. A lady was going to lose to a foreclosure the next day at noon. And I did a lot of checks and verifications, got photo IDs and stuff like that, but they needed help securing. He was ready to pay her and wanted the deed from her. And this whole thing, we got it, what we call a self-performed closing, or a tabletop closing, done in 16 hours. So before she went to auction, they went to the county office. They were local, and they had a deed template, and he had a cashier's check for her, and they had witnesses sign a receipt. Like, I had to think through the whole process. Like, how do you verify that you received payment? So a cashier's check, and I want 2 witnesses, and I want copies of your IDs on there. And I told the guy, I said, look, there's still a chance that this is a fraudster. It had been open at title, so we had looked at the title records and verified her ID. You can only do so much verification, but everything did check out, and I wasn't checking boxes. By the way, I have a background in cybersecurity and risk management, so I'm like, this deal is crazy. You should not do it. And he's like, it's a screaming deal though, and I already have title report back, and she looks like this looks legit. And I'm like, ugh. I'd say no, but he wanted to go through with it. That's the craziest and most difficult deal.
Was it legit?
Yeah, turned out fine.
Why did this guy need your help? Because it sounds like he was buying from the woman who was about to lose her house in foreclosure. Where was your help needed? She
wanted the right to buy it back. He also wanted to make sure that the documents, like title company didn't have time to help him. He had called multiple attorneys' offices. And by the time he found me, it was 10 p.m. So he was trying to do it all in 2 or 3 days. And no title company or attorney's office could do it in that time frame and facilitate the closing. So there was some custom paperwork to throw in there. And I'm good at docs. I'm not an attorney. So I've got plenty of disclosures around that I'm not an attorney. But I'm a smart guy, and we got stuff done.
Caleb's the guy you call when the attorneys and the title companies don't come through.
Well, not anymore. I'm trying to not do all the crazy stuff, because that just builds the reputation, and all I do is emergencies. So we're trying to calm that down. And in fact, I'm starting a title company so that I don't have to do stuff outside the lines anymore.
Now, you mentioned fraud, and that's something I'm paranoid about. And obviously you are too, with your cybersecurity background. But what instances of fraud have you witnessed firsthand?
We have seen people, especially with sub-2s, one of the things that you get from the seller is, hey, I need to see a copy of your mortgage statement. Okay, sure. Because when I look at that, I can see what your monthly payment is, if you're late already, what the past due balance is, a lot of details on that mortgage statement. Go look at your own mortgage statement real quick. And we have had people put those in PDF editors and edit the numbers before sending them over, misrepresenting how much is owed, deleting overdue payments. And so I have seen it happen, not at my company, because cross my fingers, we haven't had any of those. Well, we've caught a couple that were doing that as well. But we have processes in place to actually view it on the online portal. We want a shared Zoom session, log into your mortgage portal. We're going to pull the escrow statement and some other documents, but that's how we verify the paperwork that we have. Trust but verify, right? We're going to move forward with the statement that you gave us, but we're also going to verify before closing that this is actually what it says it is.
So your due diligence starts with send us a statement, but then you double up on that by saying, let's go online, log into the portal, and see what the portal says as well.
That's right.
That's a good double due diligence for anybody buying a property or doing subject to, I guess.
Sub-2 in particular. And that's also when we get most cases, the buyer gets the mortgage company login. And so that's the time we do that transfer. And you delete the seller's ACH account from it so you can't accidentally pay from the wrong account, and the buyer can add their ACH payment details in the portal.
Any other stories that our audience might find entertaining?
I really actually like running Q&As. I speak in a couple of real estate mentorships as the creative finance expert there. When somebody has, 1 or 2 people out of 1,000 get one of these deals every once in a while, but everybody wants to hear about it. So they'll come onto a live Q&A and ask how to structure and how to do things. So it's mostly case-by-case basis.
How often do you have problems that you can't solve and the deal doesn't happen versus the times that you are able to solve the problems and make the deal happen?
Most deals go through. We're looking for red flags from either side, the buyer or the seller. And sometimes the seller can be a red flag too. Remember, I have that sub-2 deal that's in Colorado, and the due on sale clause is hanging over my head indefinitely. If I didn't trust the sellers to not be trash bags to me, they could go get the due on sale clause called on purpose anyway. They can make my life pretty hard So knowing who you're getting into a relationship with is key. And I think sometimes it's better for somebody in financial distress to just go ahead and file bankruptcy, especially if that's what they're already planning, than to do a sub 2 now and then file bankruptcy later. And then their loan is still out there and the buyer has a chance of defaulting on that loan and ruining their timeline of their bankruptcy recovery. So sometimes it's just when you look at who's involved and what their real life situation is, we have to step in as consultants and say, hey, buyer, this might not be the right deal.
Tell our listeners how they can find out more about you, get a hold of you. And you mentioned you're starting a title company as well.
So calebchristopher.io is where to find me and to see what companies I own. I own a few companies. The first is Creative TC, and that's the one where we care about helping you do safe, legal, and ethical creative finance deals. That's creativetc.io. And because of my commitment to help people do creative finance correctly, safe, legal, and ethical, we have free 15-minute consults. You don't have to use us. There's no obligation. I want your deal to be safe. So go to the website, pop into my virtual office, say hi to my receptionist, and talk with one of my people if you've got a creative finance deal. We're here to help. So calebchristopher.io, I have a newsletter where I publish my real financials from my portfolio of businesses and real estate. No guru talk. I posted losses last month because we had multiple things going on that just didn't go right. I'm not going to lie to you guys on that stuff. That's my commitment to people, is that openness and honesty.
So these are the communications you have with your investors. You've opened it up to share it with anybody who subscribes to your newsletter?
That's right. And so because we're launching a title company, I am raising capital for that. This is not an advertisement, but I'm telling people that the only people eligible to even contribute funds are on my newsletter. And if they're not, I'm not going to accept it.
Caleb, last question. How are you using AI in your business?
All the time, I tell you what. So I have 14 employees, and we have figured out a script to put into Google Gemini because we use Google Workspace. So when we get a file that we take in, we're looking at the contract, we put it in Gemini and paste this whole script, and it extracts all the information we want into the specific format that pastes directly into our system, our back-end system for data entry. So that's one way, absolutely. And a lot of times we use it as a research assistant. We're not handing things off. It's an assistive technology for us on an ongoing daily basis.
Researching properties, researching sellers, what are you researching?
So for my team at Creative TC, we're consultants. So very situational context, state by state context. And so we're asking theoretical questions that to help out with what are the best options here? Is this a risk? How could you break this contract? How could the other person ruin my day, basically? If this is the agreement made between the parties, how can it be challenged in court? We're looking at those sorts of things constantly.
Caleb, thanks for coming on the show today and talking about creative financing techniques subject to, helping understand what's ethical or maybe not so ethical. And, just having this conversation. I really enjoyed your stories and I've enjoyed talking with you. So thanks so much.
Thank you.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com.
And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.